The Malaysian Anti-Corruption Commission has completed its investigation papers on individuals linked to the littoral combat ship project. In a statement, the MACC said the investigation papers have been handed to the Attorney General's chambers and it has made recommendations on what charges to file. The Commission will await further instructions after the AGC studies the papers. This comes after Prime Minister Datuk Seri Ismail Sabri Yaakob urged the MACC to speed up its investigation into the procurement of the combat ships for 9 billion ringgit, adding that if there is strong evidence, the AG should prosecute and bring those responsible to justice. To recap, in 2011, Baustat Naval Shipyard had received a letter of award from the Ministry of Defence to deliver 6 LCS as part of its fleet renewal plan. BNS is an indirect subsidiary of Baustat Holdings, which is controlled by the Armed Forces Fund Board. On August 4th, the Public Accounts Committee announced the findings of its investigation into the matter, revealing that even though the Royal Malaysian Navy should have received 5 ships by this month, no vessels had been delivered despite the government having already spent 6 billion ringgit. According to LTAT CEO Dato' Ahmad Nazim Abdul Rahman, 6.1 billion out of the 9 billion was used to buy equipment on a bulk order basis. In a Facebook post on August 8th, Nazim said the bulk order ensures cost savings in constructing the ships, which had to be built concurrently. The LTAT chief said a huge portion of the 9 billion went to the basic design and detailed design carried out by Naval Group, a major player in the French naval sector. The Employees Provident Fund stake in glove maker Hartalega Holdings slipped to 6.93% on August 5th after the EPF sold 4.32 million shares in the manufacturer. In a statement to the boss on August 10th, Hartalega said the 6.93% stake comprises 237.52 million shares. Prior to the latest reported transaction, the EPF owned a 7.056% stake in Hartalega, according to filings. A year ago, EPF's stake in Hartalega stood at 8.156%. Hartalega was among the bourse's top losers today, closing 6.9% down at 2 ringgit 28. Analysts had slashed their target prices for Hartalega after its earnings for the first quarter came in below expectations and flagged that the stock could be at risk of removal from the FBM KLCI in the upcoming semi-annual review should its share price deteriorate further. After a couple of extraordinary years where the COVID-19 outbreak fueled an intense demand for gloves, the situation is now normalizing as global vaccination progress has led to anticipation that the outbreak can be curbed, a sentiment that has already been reflected in the share price of the glove makers. Greatech Technology has entered into a memorandum of understanding in relation to the proposed acquisition of a 60% equity interest in Irish automation specialist Kaon Automation. In a statement, the group says Kaon is principally engaged in the provision of automation solutions for leading manufacturing companies globally in the medical device, automotive, electronics and consumer goods sectors. It said the Irish medical technology sector is recognized as being among the top 5 global hubs and is reputable for world-class expertise with excellent research centres and initiatives. Executive Director Dato' Tang Eng Kee believes that greater synergy for longer business sustainability will be derived from this strong partnership. He explains that with this pursuit, technology and cultural integration will shape and transform Greatech's market outreach while exposing its talent to globalization. Johor Corp has picked banks for an initial public offering of its plantation unit, according to people with knowledge of the matter, Bloomberg reports. J Corp, which is the investment arm of the Johor state government, is reportedly working with advisors including RHB Bank, Affin Bank and AMB Holdings on a domestic listing of Kulim Malaysia, the people said, asking not to be identified as the process is private. CLSA and CIMB Group are also working on the planned share sale of the unit, which could raise as much as 1 billion ringgit, according to Bloomberg. The operation could be valued at up to $1 billion or 4.45 billion ringgit in the offering, which could take place in Kuala Lumpur as soon as next year. Bloomberg previously reported that J Corp had asked banks for pitches for Kulim's IPO last month as a rally in crude palm oil prices began to cool. However, the people said that deliberations are ongoing and details of the IPO, such as the advisors, size and timing, could change. To recap, Kulim had previously been listed on the Kuala Lumpur Stock Exchange in 1975 and J-Corp became its major shareholder a year later. J-Corp took Kulim private in 2016. Kulim has 55,796 hectares of oil palm plantations in Malaysia and 7,362 hectares in Indonesia. Along with plantations, Kulim's core business areas are fruit and vegetable farming, livestock and trading and services. Malaysia's June 2022 wholesale and retail trade value jumped 44%, while its volume rose 35.8% from a year earlier, led by a spike in car sales, according to the Department of Statistics Malaysia. DOSM said the positive growth was contributed by all subsectors, namely motor vehicles at 1,642.8%, retail trade at 38.4%, and wholesale trade 19.3%. In monthly terms, Malaysia's June 2022 wholesale and retail trade volume was down 2.3% from May 2022. Compared to a year earlier, Malaysia's June 2022 wholesale and retail trade value grew 44%. The DOSM said the country's June 2022 wholesale trade value rose 19.3% to 60.5 billion from a year earlier. Retail trade value climbed 38.4% to 56.2 billion, while motor vehicle sales value spiked 1,643% to 16.1 billion ringgit. For the second quarter, the DOSM said Malaysia's wholesale and retail trade sales value rose 25.3% to 390.3 billion from a year earlier.